A financial crisis occurs when the financial system or the economy as a whole experiences a quick and significant fall. During financial crises, financial assets such as stocks, bonds, and real estate can see a sudden and large decrease in value. They are also distinguished by a decrease in credit availability and a lack of trust in financial institutions such as banks. Financial crises can be caused by a variety of factors, including overleveraging. When people, businesses, and governments take on excessive debt, they put themselves at risk of a financial collapse. Asset price bubbles. When the cost of an asset, such as a home or stock, rises quickly, it can lead to a financial crisis when the price falls sharply. Bank runs. When a large number of customers attempts to withdraw money from a bank at once, the institution may become insolvent and shut down, triggering a financial crisis. Financial institution mismanagement. Financial institutions that are poorly managed may become bankrupt or fail, which could trigger a financial catastrophe. Economic recessions. A financial crisis can result from an economic recession, which is defined by diminishing economic activity and growing unemployment. In this video we will discuss the global financial crisis or GFC of 2007-2008, its main causes and how the financial crisis impacted the economy. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex, and many more. While you are already here, don't forget to hit the subscribe button and click on the bell icon to get notifications for our future videos. So, let's begin the video. What is a global financial crisis? The 2007-2008 global financial crisis has far-reaching consequences for the global economy. A housing market bubble, unethical subprime mortgage lending practices, and an oversupply of complex financial instruments such as mortgage-backed securities all contributed to its origins. The subprime mortgage industry in the United States, in particular, was a driving force behind the 2007-2008 global financial crisis. Under the umbrella term subprime mortgages, loans with riskier lending terms and high interest rates were made available to individuals with poor credit histories. The growth in subprime mortgage loans, and the subsequent marketing of these loans as securities, caused a housing market bubble in the United States. Many borrowers were unable to make mortgage loan payments as the housing bubble burst and prices began to fall, resulting in a wave of foreclosures. As a result, the value of mortgage-backed securities fell, and the global financial system encountered a liquidity crisis, triggering the 2007-2008 GFC. Because of the crisis, housing values fell dramatically, there were many foreclosures, and credit markets were paralyzed. As a result, there was a financial crisis that necessitated government involvement and bailouts, as well as a global recession. The repercussions of the crisis were felt globally, producing widespread economic suffering as well as a drop in employment and economic growth. What are the main causes of the global financial crisis? Because of the globalization of financial markets and the linkages between financial institutions and nations, the financial crisis spread fast over the world. The following are the key causes of the 2007-2008 global financial crisis. Subprime mortgage lending practices. Banks and other financial organizations provided riskier loans to people with poor credit, known as subprime mortgages. These loans were typically packaged and sold as securities, inflating the housing market. Lack of regulation. The absence of financial sector rules resulted in the rise of complex financial instruments that were difficult to analyze and grasp, such as mortgage-backed securities, credit default swaps, and dangerous lending practices. Housing market bubble. Subprime mortgage lending combined with the marketing of these debts as securities caused a housing market bubble in the United States. Once the housing bubble ultimately broke, many borrowers found themselves unable to make home loan installments. Credit market freeze. When the value of mortgage-backed assets fell, credit markets became frozen, making it hard for financial institutions to borrow cash and resulting in a liquidity crisis. What are the consequences of the global financial crisis? The global financial crisis of 2007 to 2008 has far-reaching and long-lasting repercussions. Some of the most notable repercussions of the global financial crisis on the world's economy include: the economic global recession brought forth by the crisis was defined by a sharp decline in economic activity, dropping output, and rising unemployment. Several sizable financial institutions failed as a result of the banking crisis, which necessitated government intervention in the form of bailouts and recapitalizations. Housing price decline. The U.S. housing price slump that caused a large drop in household wealth and a wave of widespread foreclosures served as the crisis's catalyst. Rise in public debt. Public debt increased as a result of numerous government interventions to maintain their financial and economic systems. Political repercussions. The crisis led to a decline in confidence in the government and financial institutions and fueled the emergence of populist and anti-globalization views. Financial sector reforms. The crisis led to significant changes in the financial industry, such as more rules and oversight, which are intended to lower the likelihood of future financial crises. Was Bitcoin a response to the global financial crisis of 2007 to 2008? Bitcoin was developed in part in reaction to the worldwide financial crisis of 2007 to 2008. The financial crisis exposed the flaws in the existing financial system as well as the hazards of relying on centralized financial institutions. The creator or creators of Bitcoin or BTC, who went by the nickname Satoshi Nakamoto, designed the digital currency with the goal of creating a more secure and stable financial system that was not prone to the same kind of risks as the traditional financial system. The birth of Bitcoin, as well as the subsequent growth of cryptocurrencies and blockchain technology, are regarded as a rejection of the existing financial system and a direct response to the bad impacts of the 2008 global financial crisis. The public ledger, which holds records of every transaction on the Bitcoin network, makes it easier to detect and monitor money flow. This contributes to the suppression of unethical activities such as insider trading, market manipulation, and other unethical conduct. What was your experience during the global financial crisis of 2007 to 2008? Share your thoughts with us in the comments section below. See you in the next video. Until then, take care and keep investing in crypto.
Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.